Ethereum is in some serious trouble right now. We have seen it moving sideways, we've seen it moving down, and everybody's wondering why. I'm sure you want to know, so let's really get into it. I'm Brett at CryptoGX, and in this video, I'm going to talk to you about why Ethereum has been going down, what's going on with it, and really what's going on next. So as you can see here, this is the last month for Ethereum, and we all probably remember a couple weeks ago, Ethereum hit almost about $4,700, $4,800. It went into new all-time high territory, and everybody was really excited, and now it dropped. It is down to about $4,000, and it looks pretty sketchy. People are probably freaking out. A bunch of people probably sold, and that's causing some fear in the market. Now we've got this little uptick right here. Don't worry too much about that. Obviously you see things going up and down, but this is what we would call generally sideways. This would be up. This whole movement is down, so you kind of have to zoom out really. But let's talk about what's going on here. One great article that I found, and I love the blog, I recommend you check them out, but this article talks about how spot Ethereum ETFs have seen the largest outflow week since they were formed, and this talks about how Ethereum reclaimed 4,000 from this 3,800 mark, and kind of what they're thinking here. So if we scroll down here, the first thing that they mention is the amount of outflows, and as you can see, $795 million worth of outflows for the week ending September 26th. Now these outflows outpaced the second worst week, which was $787 million worth of outflows, so both really close to 800 million. And this is now the highest outflow week that it has had, and ever since these Ethereum ETFs have existed, starting in July of this year. Now the two that we're talking about specifically are going to be BlackRock ETFs and Fidelity ETFs. BlackRock and Fidelity are two big companies where you can get ETFs. I've got videos on what ETFs are in the channel. Just check those out. I definitely recommend you understand a little bit more about ETFs. If you don't, essentially they're a vehicle where you can put your money to follow the value of Ethereum without actually buying it. But let's get back to this. 200 million flowed out from BlackRock's ETFs, 362 million flowed out from Fidelity's ETFs. And it's crazy to me that 250 million outflows were just from Thursday and Friday. This is a big thing that happens in just the markets and investment markets in general. When Monday hits, often people are buying and then investments go up. And then when the end of the week hits, oftentimes people are selling and then, the prices of things go down. It just happens. It's a common trend. It's not all the time, but it happens pretty often. Now these specifically, because they're ETFs, they can't be traded 24 hours like Ethereum itself can. So that's kind of why I mentioned that it can follow that weekly trend, and why maybe that could give some reason as to why Thursday and Friday were the higher of the, outflow days. Now all these outflows do have an effect on the price of Ethereum. Obviously this helped lead to that going down to below 4,000 price point. But I think it's really important for us to compare Ethereum with Bitcoin because we need to understand how this fits into the entire market rather than just, Ethereum itself. So Bitcoin ETFs also logged a high level of weekly outflows with a total of 902 million across the funds. That's obviously higher than Ethereum by dollar value, but we know that Bitcoin is much higher in entire market value. So that's not how you really compare it. You want to compare it to itself, essentially. So comparing the Ethereum ETF outflows to Bitcoin ETF outflows, BlackRock, as we know with the Ethereum ETFs, had about 200 million in outflows, and the BlackRock Bitcoin ETF had only $37 million worth of outflows. So since Bitcoin also logged a high level of weekly outflows, that tells us that there is overarching issues in the crypto market. And this is already very clear with what the article itself implies. It is triggered by a mix of technical breakdowns, macroeconomic jitters, and cascading liquidations. So there's cascading liquidations, meaning that people are getting liquidated in their leveraged positions. So if they're going long or if they're going short, well, I guess in this case, they'd be going long and the price is going down and it breaks below, they're getting liquidated. I've got other videos on leverage trading as well, so you can understand more of that and why liquidations happen. But basically, people are losing because they're betting wrong. The other piece here is the macroeconomic jitters, which I will get into in a second. But the fact that Bitcoin is also having a high level of weekly outflows, that's what's showing the macroeconomic jitters. And maybe jitters is better than issues because we're still in our bull market here. But when when Bitcoin goes down, everything goes down. And when Bitcoin and Ethereum go down, then yes, everything goes down. So then the last thing here, before we jump back to the macroeconomic issues here, is the trigger by mix of technical breakdowns. So I'm not going to get super into technical stuff just because, that's not where I like to focus on these videos, at least. You can let me know in the comments if you'd like more technical videos, and I'd be happy to do them. But this is kind of what you're going to be looking at if we're talking about technical stuff. If you're not familiar with it, this is TradingView. It's a trading chart. It'll give you all sorts of indicators and things that, you may or may not want to see. I've only got a couple things on here, but this green and red is the price, and we've got the volume down here on these bars, which is the amount of trading by dollar value. Then I put a moving average line right here. This is the 50-week SMA. And so to simplify, just to give you an idea of what they're talking about here is, for example, often when the price crosses the 50-week SMA, it is indicative of a trend of something happening. So as you can see, right, if we go back here with the price under the 50-week SMA and then it crossing above the 50-week SMA, it then spotted a trend and the price went up. Now, it doesn't always work. See, it crossed down below and then crossed down back up again, but this time it crossed back up and then we were up, 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 up. And so right now, the 50-week SMA has been crossed in the downward trend, and this was September 22nd, although this is on the daily. If we go to the weekly, then it'll kind of change how that looks. But essentially, those are the kind of indicators that you look for and the technical breakdowns that people are kind of worried about. These are kind of important when it comes to more short-term trading or really, minute details of, understanding specifics of what's going on from a day-to-day. You can get long-term trends from this kind of data as well, but macroeconomic and cyclical focus is more important for beginners at the very least. So let's boil this down. What does all this mean? Where are we going and how do we, make our decisions going forward? This is really indicative of short-term stress, but not necessarily the death of what's going on here. The massive outflows, as you can see, are a red flag, especially with the price going down during this month here. But they show that institutional capital is sensitive, but not entirely going to destroy us because we have rebounded to 4,000. I think that's a really good sign. Now, if more capital continues to exit these ETFs, that's going to put more downward pressure on Ethereum. I think we should just keep watching for capital to flow into these ETFs and, just keep an eye on that. You can do that on charts like TradingView or, anything like that too. Now we do have these big players. This ETF is new, BlackRock, Fidelity, them, buying up all these coins and tons of other institutional players and big companies and things like this buying up coins. That's making this particular cycle extra strong and I would say much less volatile than previous cycles. So that gives me confidence in the kind of historical playbook playing out, which, as I've discussed on the channel before, is kind of an October timeline for the end of the cycle. Again, lots of videos on that on the channel. I definitely recommend you check those out so you can understand more detail about the cycle and where things are going and why. Look at other things like regulation and inflation and keep an eye on, what those announcements are going to be. It seems like so far the presidential administration is pretty crypto positive and things have been going fairly well, but we just don't really know. Anything can change. And also keep an eye on institutional capital and big companies and even things like the treasury fund for the US or any other country. If there's going to be much more big inflows into crypto for any particular reason, that's going to be your sign to keep holding on. If there's more outflows, that's going to be your sign to be a little wary. But I think we should keep on keeping on. I am definitely sticking to my October timeline as of now. It doesn't seem too worrisome, especially because we're on the edge of a potential rebound. I wouldn't say it's confirmed yet, but in my mind, it's looking that like it's probably going to be more likely than not. I hope you learned something. If you did, make sure to like this video so YouTube puts it in front of somebody else, and make sure to subscribe to stay tuned for all things crypto. I put links to Coinbase and Crypto.com where you'll get at least $50 in free crypto just for signing up with those links. And if you want to get some meme coins, I left a link to MoonShot where you can claim some free meme coins just for signing up there. Thanks again for watching. I'll catch you in the next one.